surprise when you've seen the strength in the market. We thought this time last year was actually the peak in market. Values increased by 4% over winter last year. They're up 4.2% over winter this year, so slightly stronger. And the signs of a slowdown obviously were not true. We've seen strength coming back into the market. When we talk about it, though, it's really a story of Sydney and Melbourne. So over the last 3 months, Sydney property values are up 5%, Melbourne up 6.4%. The next best performing city is Canberra with 2.4% growth. So really, the story continues to be Sydney and Melbourne, and then the rest of the capital cities well behind. It is a little bit of concern that we're seeing such a two-tier market. We're seeing Sydney and Melbourne and then the rest of the capital cities. If you have a look at a market like Brisbane, Perth's been one of the better performers, and it's only seen growth of 15% since the start of 2009. Brisbane and Adelaide about 10%. So really, in real terms, property is becoming more affordable there, but we're not seeing the seepage of buyers outside of Sydney and Melbourne now moving to those markets. You typically find Sydney and Melbourne grow first, and then you see Brisbane, Adelaide, Perth growing 12 to 18 months later. We haven't yet seen that. This growth phase has now been going for 28 months. And I think one of the main factors is we're not seeing an outflow of residents from New South Wales and Victoria into other states like we did before the financial crisis. And I think if you've got a good job, you're in Sydney or Melbourne, you're less inclined now to risk that and move to another part of the country ever since the financial crisis. And I think that's what's holding back those cities to some degree. The RBA seems pretty blasé about the growth at the moment. They've seen very strong increases over the last 28 months or so in both Sydney and Melbourne. But as we said, it's not happening necessarily in those other capital cities. I think what would change things is the introduction of macroprudential tools like what they're using in New Zealand or in the UK to limit how much higher risk lending banks can do. But to date, they've been fairly reluctant. They've highlighted that they're not necessarily too keen on using those measures, or an interest rate hike or two would probably do the trick as well. But I think while we have low interest rates, most people think that that's going to continue for at least to the end of this year and early next year. We're going to continue to see growth in the housing market, particularly in Sydney and Melbourne.